Welcome to the Daily Business and Finance Show. Unpacking Nvidia's value surge, ARM Holdings investor frenzy, and the rebuilding FOMO foundations. Delving into Permian Basin concerns, Supermicro overbought status, and Morgan Stanley's fresh money buy list. Mixed Wall Street results ahead of CPI, Gilead's CymaBay acquisition, and Arista Networks' Q4 tumble. Stay tuned after this short ad break to delve deeper into these headlines. Nvidia, recognized as a significant contributor among the Magnificent Seven, has experienced a market cap increase of $600 billion in just 2 months. This is comparable to the value of one Tesla. Nvidia tops the performance chart this year within the group, boasting a rise of 40%. Other members such as Meta, Amazon, and Microsoft have also seen substantial gains over 30%, 15%, and 12% respectively. On the other hand, Apple and Tesla have faced declines. The current market cap of Nvidia matches that of China's stock market as U.S. stocks reach an unprecedented high, making up 64% of MSCI All-Country World Index.
ARM Holdings, a chip design firm based in Britain, experienced a nearly 30% increase in share value after presenting an optimistic forecast for the fiscal year 2024 that exceeded expectations. The company anticipates a rise in earnings per share due to heightened demand for their artificial intelligence products. Additionally, ARM has revised its sales forecast upwards and now projects revenue growth from $2.96 billion to a range of $3.16 billion to $3.21 billion.
A report from Evercore ISI Equity and Derivative Strategy indicates a revival of FOMO, an acronym for fear of missing out, within the markets. This resurgence is propelled by generative AI and positive economic conditions. The report underscores the triumph of Nvidia as a facilitator in AI, drawing parallels to Cisco systems during the Internet surge. However, it cautions investors to maintain defensive investments due to possible sudden market shifts. It also recommends diversifying into sectors such as communication services, consumer staples, and healthcare.
Diamondback Energy has acquired Endeavor Energy Partners in a deal worth $26 billion, making it the third largest producer of oil and gas in the Permian Basin of Texas. This acquisition is part of an ongoing trend of mergers and acquisitions within the region, which has led to concerns about future reserves. Despite these concerns, energy analytics firms forecast that output will remain steady for decades to come due to multiple stacked plays and proven reserves within the basin.
Supermicro, a technology company, saw its shares skyrocket by 7.7%, reaching $797.82. This surge has pushed the stock into what is considered extremely overbought territory, as indicated by a relative strength index of 94.31, significantly surpassing the standard threshold of 70. From January 17th to now, there's been an approximate increase of 167% in share value. Looking back at the past year, Supermicro's stock has seen an astounding rise of approximately 813.9%.
Morgan Stanley's team of analysts have unveiled their fresh money buy-rated stock list, spotlighting high-quality growth stocks. This list features CenterPoint Energy with a target price set at $28, Coca-Cola with a target price of $65, Colgate-Palmolive priced at $93, McDonald's valued at $327, Mondelez Corporation with a target price of $78, SBA Communications priced at $242, Verizon Communications valued at $44, and Walmart Incorporated, which is set for a target price of $168.
On Monday, United States stocks concluded with mixed results. The Nasdaq Composite experienced a minor decline, while the Dow Jones Industrial Average saw an increase. Despite surpassing the 5,000 points threshold for the first time last week, the S&P 500 also experienced a slight dip. In terms of market value, Nvidia momentarily surpassed Amazon, securing its position as the fourth largest U.S. firm. Investors are keeping a keen eye on this week's Consumer Price Index report and retail sales data to assess economic health and anticipate potential interest rate cuts by the Federal Reserve. Significant deals of note include Diamondback Energy's merger with Endeavor Energy Resources valued at $26 billion and Gilead Sciences' acquisition of CymaBay Therapeutics for $4.3 billion.
Gilead Sciences has agreed to purchase CymaBay Therapeutics at a cost of $4.3 billion. This offer represents a 27% premium on the recent closing share price of CymaBay. The transaction, which has received approval from the boards of both companies, will enable Gilead to broaden its liver disease portfolio through the inclusion of seladelpar, a promising drug developed by CymaBay. The completion of this acquisition is anticipated in early 2024 and it's projected to enhance Gilead's revenue growth following FDA approval for seladelpar.
Shares of Arista Networks experienced a nearly 4% drop, even with a positive fiscal forecast. As a supplier of networking equipment to firms such as Meta Platforms, the company predicts first quarter revenue to range from $1.52 billion to $1.56 billion, surpassing the expectations of analysts. Despite this, stocks from other networking equipment producers like Cisco and Juniper Networks saw a decline in after-hours trading subsequent to these results. Thank you for tuning into the Daily Business and Finance Show. Stay informed, stay inspired, and we'll meet again tomorrow to decode more business mysteries. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. It's been a pleasure, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.